Is the SUD life Aadarsh plan the right path to financial security, or are there smarter choices out there? Let us find out the answer to this question through an in-depth analysis in this video. Hi there, welcome back to holisticinvestment.in, where we help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. Now, before analyzing this policy, let us first understand a few basic details about it. So this is a limited premium, non-linked, non-participating savings life insurance plan. So some of the key features of the policy are: you pay premiums for a limited period while the coverage continues for the entire policy term, and there is a lump sum assured at the end of the policy period as a guaranteed maturity benefit, and you can choose a payment mode that suits your convenience, and there is accidental death benefit which provides extra security to your family during difficult times, and your premiums qualify for deduction under section 80C, and maturity proceeds are tax free under section 1010D of the Income Tax Act. And there are benefits like maturity benefit and death benefit in this plan, but some of the advantages are: you can avail a loan of up to 70% of the policy's surrender value, providing liquidity in times of need. But there are some disadvantages as well, like this policy term and premium payment term in this policy lacks some flexibility, and the sum assured is insufficient to meet long-term financial needs. And this plan does not offer any kind of loyalty additions or bonuses for continued investment. So these are some drawbacks that you need to keep in your mind before deciding to invest in this policy. Now, as we have a basic idea about this policy, let us move on to an analysis part of the video where we are going to conduct an IRR analysis to help us make a more informed decision. But if you do want to know more about certain aspects of the policy in detail, you can refer to the policy brochure. So here, for calculation purpose, we are going to calculate the internal rate of return based on the benefit illustration given in the policy brochure. So for calculation purpose, let us assume that a 35-year-old male has invested in this plan with a sum assured of 4.72 lakhs. So he pays an annual premium of 47,290 rupees for 5 years under a 10-year policy term. So at maturity, the benefit works out to be 3 lakhs. So the IRR for this cash flow is just 3.01% as per the policy's maturity calculator, which is a very low return. Moreover, the death benefit coverage is inadequate. So while the guaranteed payout may seem reassuring, the actual returns are far below what even traditional debt instruments can offer. So looking into such a plan for the long-term period with minimal growth potential can severely limit your wealth creation category. Thus, this policy is unlikely to generate a meaningful corpus to meet your future financial goals. Now, as we know that this policy is not giving us the desirable outcome that we need, let us move on to a comparative analysis where we are going to use an alternative strategy in which we are going to use the same premium we invested in SUD Life Aadarsh plan, but we are going to split it and invest in insurance and investments separately. So in the earlier example, the death benefit under this plan was 4.72 lakhs, which falls short of the IRDAI's minimum guideline of 5 lakhs. Fair comparison, we are going to assume a pure term life insurance policy of 5 lakhs. So a pure term life insurance policy with a sum assured of 5 lakhs cost an annual premium of just 5,600 rupees. So the policy term is 10 years with a limited premium payment period of 5 years. After paying the insurance premium, the remaining 41,690 rupees per year is invested. So depending on your risk profile, you can choose to invest in either debt or equity instruments. But here in this video, as we are going to invest for a long-term period, we are going to consider investing in an equity mutual fund which has better potential to give higher returns in a long-term period. So in the equity mutual fund, the final maturity value is 5.22 lakh. After accounting for capital gains, the post-tax value is 4.99 lakh, which results in an IRR of 9.67%, which is the post-tax return for the combination of the pure term policy and the equity mutual fund investment. So for pure term insurance combined with a mutual fund investment provides you with higher returns, better liquidity and flexibility. On the other hand, SUD life policy locks your funds, delivers just 3.01% IRR and offers you with lower coverage. And if you want to know how we have calculated tax for equity mutual fund, we do have presented a small tabular column on the screen for your easy reference, which you can pause and see. So what is the final verdict then? Is investing in the SUD life Aadarsh plan worth it or not? So this policy offers you guaranteed returns on savings, but relying solely on this guarantee is not ideal for long-term wealth creation. The returns are below average and the sum assured is inadequate to meet a family's financial needs. With a 10-year policy term and a 5-year premium payment period, the structure may not suit every investor. Ironically, while Aadarsh means ideal, the plan falls short of being an ideal addition to your investment portfolio. So when evaluating long-term investments, the focus should be on inflation-adjusted returns that help you achieve future goals. Despite offering certainty, this plan does little to help build the required corpus for your financial milestones, and it also has a high agent commission. The biggest limitation lies in the bundling of insurance and investment. A smarter approach is to buy a pure term insurance policy for protection and invest separately based on your risk profile and financial goals. This strategy ensures both adequate coverage and stronger growth potential.
You can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.